So whether or not you are a hodler, an investor, a trader, and you just got caught out in the recent little fall in Bitcoin, then you're going to want to watch this video, because in this video, I'm going to show you a very, very, very simple strategy that you can use, adapt into your trading, investing philosophy, whatever it is that you do, whatever is your strategy. You can put this very simple thing in there and you're going to make 4 times the amount of Bitcoin. So all we're talking about is a very simple moving average. Now this isn't like a 200-day or anything normal that you would usually see. This is just something that I've noticed myself over years and years trading the crypto markets, and I found this to be very, very influential, particularly with Bitcoin and a lot of other cryptos. We'll have a look at another one in just a moment, but what we want to do right now is we're going to go all the way back. We're going to backtest all of Bitcoin's history to see what would happen if you sold every time that the price came below this yellow line and you bought then whenever it would go back above. You can see here that as Bitcoin came down, it bounced off of this yellow line and dropped down. You're going to see that happen a lot. Now, let's just go straight back in time, all the way back to 28th of October 2012. And back then, right about here, you could have been buying Bitcoin. This is where this strategy would have bought in for the very first time at just $10. So where is that? That's $10.53. In fact, if I just pull up this here, we can see that I'm actually tracking all of these trades. So this isn't like me making it up. This is actually legit numbers coming out of TradingView for this strategy. There it is, 28th of October 2012 at $10.53. So at that point, we bought 94. Let's just bring up a calculator and work out what that would be worth today. So if we're going to be starting with $1,000 and we divide that by $10.53, then we get exactly the same as what's there, 94,9667. Okay, and all we would need to do now is find out that's basically 94 Bitcoin. That is what you would have had if you'd bought back then with $1,000. And today's price is 38,754. So let's times that by 38,754. So if you just hodled the entire time, you would have $3.6 million right now. So not bad, eh? $1,000 into $3.6 million. Not bad at all, but we can do well better with this strategy. So this would be our first buy here, and then not long after we're going to be selling again, and then buying again, and then selling again, buying, selling, and buying. And you're going to see this happen an awful lot over time when you're trading or investing in cryptocurrencies, and it's something that you really have to stick with the strategy. So just imagine right here to begin with, you would have got in, out, in, out, in, out, and if you'd got out at this point and said, you know what, this strategy isn't going to work for me, you know, you're not really making any money, in fact, you're probably losing money on a lot of these trades, then you're going to miss out this final buy where it just takes off and starts going crazy. So that final buy there, that was $10.96. And then where you're going to sell after that, you can see Bitcoin just going absolutely crazy now. All the way up. So this is where you would sell. So Bitcoin starts to retrace down. When it breaks down under that yellow line, you're going to be selling out there at $99. You've 10x'd. Down there if you wanted to, rather than waiting to buy at this price right here. So this is really like a fail safe for your trading strategy to make sure that you're going to sell there rather than waiting until the price comes all the way down here. So you would have basically sold out right here at 500 rather than 50% down at 200 and whatever. Just like recently, we broke down under 50. This strategy would have got you out at about $50,000. You can see here, look, it's banging across that yellow line. As I said, this yellow line, very, very, very important with Bitcoin. It is a big resistance area. You can see it here again, banging across here. And eventually we break up through, but it's not a clean break. In and around this level, you do get this buy in, sell off, buy in, sell off. And, you know, you're not going to make money on these particular trades. But again, as soon as you do get this one runaway buy, That's the one that you want. Now Bitcoin is off on a runner again, and then it's back down. So basically, as soon as you get past that line, you need to sell. You need to sell straight away, or else you might be in for a loss. But this time turned back around again, and it's back on the up. Here it goes. So this is now 2016. So it came back down here just a little bit, touched down here on the yellow line, touches down again, but doesn't really come down enough to actually cause a sell. We got a lot of these spikes here going down, but again, none actually closing down below and actually going lower than the yellow line, so it doesn't actually sell you out at that point. Going along now through 2016, we can see again, we're in and around the line, buying and selling, buying and selling. The price is just $600 at this point right now. We're in here, we're out here, we're in again, so we're in finally here at $637 just before the price starts to take off again, and up it goes all the way up, coming down every now and then just to touch down, a little in and out again, and then you're off again, back up, back up, back up. But what you really want this for is for when we get to the end of this bull run. You can see there, that's the top, or about 20,000. That was 2017. And as Bitcoin started to come down, so this was December in 2017, as Bitcoin was going down, this is when all of the altcoins were going up and getting their sky high, all-time high values. So things like XRP, these were pumping right up at the beginning of January, and here at the end of January. So this sell where Bitcoin finally broke down at about the 10,000 mark. This is where all of the altcoins had basically rallied and the real start of the bear market began. So this was the end of January, January 31st. This is where you would have sold out at 10,000, which would have been pretty good, to be honest. I mean, obviously you're in and out there as it just hits off this yellow line again. And then if you remember this market well, you'll know that it went all the way down to 3,000 eventually. So you got a lot of these here where it's just sort of in and out as it sort of breaks this line. And then down here, I think this is where we broke down to 3,000 down the bottom. And then we eventually come back above right here in 2019. So just like we saw there back in 2017, Bitcoin pumped, it got its all-time high, and then the altcoins, as you well know probably, they will then start pumping up and get their all-time highs. Probably the same is going to happen later on this year. The trick is now, how do you know when to get out of the market so you're not dragged down into the bear market again? Well, this line is what we're definitely hoping is going to help to get you out before the real bear market begins. And right now, going through here, you can see we're up again now. This is coming up into 2020. So in and out a little bit, in and out and out. Look at that. So that's getting us out there at 10,000 just before a colossal drop down to 7. So down 25%. In fact, down at this point here, yeah, down about 25%, banging up again there towards it, and then eventually breaking through at about 8. So not making a great profit there, but you could have took a much better profit down the bottom there. Coming back down there at 8, back up at 8 again. And here we go. We're going to go through these numbers in a little bit so you can see just how much more money you would have made using this strategy to get in and out every time it goes under this yellow line. Finally here, so this is May the 13th of May 2021, Bitcoin broke down. This is where you would have got out, which is in and around the sort of $50,000 mark. This is where you'd get out, and that is where we are right now today. So like I say, there's absolutely nothing stopping you for when you do get out. You can actually start buying the dip when you get down here. It's a great tool, like an indicator, a signal to get you out. It's something that we're now implementing into our own sort of trading strategy, the MCN trading signals. You might have seen the bot that we've got already. And what we're going to be using is the trading signals, the little Telegram alerts that come up. It's going to come up and it's going to be pretty obvious that something's gone wrong with the market. And it's going to look a little bit like this, where you've got like 50 of these signals blasting out at you through Telegram, and you're going to know that you need to take a look at the market. And if you're running the bot will just automatically liquidate all of your positions into USDT or maybe BUSD, whatever stablecoin that you're choosing. And then all the time that the market is down underneath the yellow line, it's going to basically put you into bear mode with the bot, and it's just only going to be allowing you to use USDT pairs or BUSD pairs. And then when you're back up above the top and we're all bullish again, then it's going to allow you to default into Bitcoin, or you can also choose Ethereum if you want to trade in Ethereum instead. But I know what you really want to know is just how much money this strategy makes. So as I said earlier, about 3.6 million is the figure that we need to beat here. And right here, you can see all of the trades that this strategy has taken all the way through. In fact, it isn't even that many at all. So if we go over to the overview here, we can see that it's actually only 27 trades. 27 trades is all that you would have had to have made between 2012 and today. And look how much you would have made. $12.4 million. 4 times the amount of money you'd have made just hodling. So I know it sounds good. All you did was put in $1,000 and now you've got 3.5 million. That's great. You're a hodler. Brilliant. But you could have, just with this very simple strategy, only taking 27 trades over all of those years. You've now got 12.5 million. I know which one I would prefer. And if you really want to know exactly what that yellow line is, well, we've spoken about it lots of times on this channel before. In fact, it is right here in the Moocharoo Crypto Ninja 7-in-1 indicator, which I've done a video on. I'll leave a link up there below if you haven't already seen it. Basically, the 7-in-1 indicator, we would be buying underneath this green line here, and we sell off whenever it goes over the red. If it goes over this thin red line up here, we're definitely selling. But this yellow line, which is on here, this is the line that we use. So this is the line I've been using for many years now, trading crypto. And you can see here, somewhere back here, we would have bought in right about here as we broke into the bull run. So this was April 2020 last year, just as Bitcoin broke 8,000, and then we'd have been selling just a few weeks ago for 50,000. So not a bad little return there. Now this also works on other charts as well. So here you have Ethereum versus the dollar, and you can see exactly the same yellow line being used. And when you come here to the to all of the stats for this, we can see that we'd be making $3.5 million using this strategy and only 23 trades. Now, obviously, this strategy doesn't go as far back as Bitcoin, because Bitcoin's a lot older. So this is only as far back as 2015 was when this started, and that you'd have been getting Ethereum at that point at just $1. Just $1, can you believe it? And if we have a look at just what that would be, so obviously we'd be starting off with 1,000 Ethereum for $1,000. And if we times that now by today's price, which is 2820, so times 2820, that'd give us 2.8 million, obviously. Okay, so 2.8 million. But we are making a little bit more using this strategy. Yes, it's only 23, and if you do sell off at the peaks and buy the dips, you're going to be doing a lot better. But this, as a kind of fail-safe strategy, will certainly make you a lot more money. So 3.5 rather than 2.8. So great little strategy there. I do hope that you've enjoyed that, maybe even learned something there. If you do want to know more about that yellow line and how you can use that yourself, just check out our video there, which goes over the 7-in-1 indicator. And if you're interested in our bot, check out our trading bot strategy as well. And hey, that is about it for me for now. I'll see you again in the next video.